Okay, folks, welcome. Welcome to Thursday Night Stock Charts Live. I'm a wee bit late because I'm a wee bit unprepared. So, my dinner is pistachios, and I'm really hungry. So we had some transports report today. So we're going to want to take a look at the charts of the transports. We're going to go over the weekly charts and see how it plays out to close out the week. Nothing much after hours. UPS. Union Pacific. We own a railroad. So I'm curious to see how that did. We own CSX. We're going to talk about that chart and Boeing quite a bit tonight because I bought more Boeing today. We bought more Soundhound yesterday, and that worked out well. We have a regional bank coming out tomorrow. How's my audio? Oh, God, I got to check comments. Hopefully my audio is good. Thank you, Seymour Rivers. Thank you, sir. All right. All right. Let me share my screen, and let's get started. Not much in terms of earnings after hours. So not much to talk about on that front. I did post in the members area requested symbols you want me to review. So please head on over there, enter your symbols. If you're not currently a member of the free forum, please do so because I'm going to shut that down to the general public in a few days. Let's go over to the Twitter. I'm really playing catch up here. I haven't even looked at the closing price action of the moving averages yet. I know I'm not sharing my screen. Bear with me as I get together and people populate in. I'm going to want to do a scan tonight using TrendSpider. So let me share my screen. Let's get started here. I really have no major agenda. I just want to look for some good stocks. So let's begin. I'm totally ad hoc. Normally I have an outline of what I want to talk over. Tonight, flying by the seat of my pants. So let's have a good show. It's Sober October. I'm down 7 pounds. But man, November the 1st, I'm going to have a fine ass Japanese whiskey, single malt, awesome. All right, we got people populating in, wonderful. Guys, you're going to have to forgive me. I've been doing, what do you call it, intermittent fasting, like 16 hours, no food, and low carbs, so calorie deficit. This is literally my first meal of the day, pistachios. All right. Let's go through the doom and gloom first off. This is off my Twitter feed. Fred, this is published by Indeed. I guess they pull the data from Indeed. New job postings by Indeed in the United States. They peaked out in 2022. Looks like December of 2022. I'm sorry, 2021. No, actually more like February, March of 22. That's more appropriate. And look at this drop. Yet, the economy grew 350,000 jobs last month. Go figure. Incredible economy. Incredible. Go buy stocks. Housing market. This is one of the lowest levels on record, and it's the lowest level going back to, I guess, 1990, and that's when you had the S&L crisis. Then we were in recession. This is the government's jobs data. I love this. You hear me talk all the time about 2 and 3 standard deviations. This was a 3.6 standard deviation on government job hiring. Tell me that this is not rigged. The largest spike by far since this report began back in 1990. In white, you have government data, government employment rising and falling. And in dashed horizontal line, you have a 2 standard deviation move. That's kind of your normal, like a Bollinger Band. That's your normal overbought on a relative basis type of measure. We are at 3 what again? 3.9? 3.6. 3.6 standard deviation. Folks, next month's jobs data, the revision is going to be a nightmare. And if it's a President Trump, I guarantee you they're going to use that to try to sabotage his presidency early on. Mark my words, we'll be talking about it this time next month. Unless, of course, Kamala wins, and I don't even know if we're going to be able to talk online anymore. Oil. I want to talk about seasonality on the energy stocks tonight, because I got an email from Dan over at TrendSpider. He's like, take a look at this. So I promised him I would take a look at it. So we're going to go over that tonight. Energy looking very, very good here. The key is oil. Oil must rise. So we have an empty pistachio show. So we have JIP. We have the gold to oil ratio at one of its highest levels ever since COVID, and basically you literally couldn't give oil back away at that point in time. So we need to look at oil here as a potential trade. What else do we have? Multiples. Stock market, this is as of the 22nd. Stock market hits the most overvalued since the peak of the dot-com bubble. Think about it. But we bought stocks. Stock market concentration of risk level in more than 90 years. So this is basically the market cap of the largest relative stock in the basically all it's doing is showing you a concentration of all the names that are making up for the move in the overall market. So Tesla today, not that it's a huge component of the Qs, but a component nonetheless, and had a huge day today. Netflix just recently hit all-time highs. Meta just recently hit all-time highs. Microsoft has been struggling of late, but we'll go over that chart in a moment. All right. This is all me. Last pistachio. Okay. That's it. That's it. Hello to folks. Seymour Rivers, thank you, sir. Appreciate that. As always. Danny, welcome. Polish Taco, welcome. Love that name. William, welcome, brother. TZ, welcome. And Mr. Franklin, I replied back to your question about CSX. Was it CSX? I don't know whether or not it took. Did you get that? Let me see if I replied back to you. the hell happened to it? I lost it. All right. Let me know if I didn't reply back to you. I should have replied back. But I may have lost it. I didn't save it. Mr. Sean, welcome, sir. All right. So, economic data this week, there's really no economic data that's really measurable. The only one that's really worth talking about is that we had initial jobless claims today. Came out lighter, which is great. I'm glad our fellow Americans are not filing for jobless claims. The services PMI, Purchasing Managers Index, that came in on par. Manufacturing remains in concession and in contraction. Now, here's the anomaly about that last non-farm payrolls, the one that was so big, so huge, that Bidenomics is a wonder of the world. Enshrine him in gold ornaments, the greatest president of all time. Problem is, we lost 7,000 jobs in manufacturing. Go figure. Durable goods, that comes out tomorrow. All right, nothing to talk about there. So we had an event that fired off today. And that event is we hit a 37 handle on the Schiller PE ratio, and we closed there. So it looks as though we're getting ready to blow through the 2010 highs on the Schiller PE ratio. And that was at 38.58. We're stone's throw away. So we're going to take a look at the weekly charts in a moment to see how we're poised to close out the week. Oh, here it is. But folks, if you're not currently a member, join up. I'm shutting down the free access soon. All right. I did reply. All right, good. Okay. CME Fed Watch tool. Probability of a cut is locked in. Guaranteed to be a quarter basis point cut. The Federal Reserve's balance sheet, what did they do last week? They continue to roll off debt off of their balance sheet. They're almost down below 7 trillion. How much did they roll off? 39, about $10 billion in the past week. So pretty aggressive. Now, again, I have no agenda for today. I'm going to be doing this ad hoc, meaning flying by the seat of my pants. So let's get rid of this. I want to take a look at the yield curve. Oh, we gave up some ground today. No wonder why equities rally. Let's go to a daily view. This is a big move lower today. Big move lower. Yeah, look at that. Interesting. Okay. So let's keep an eye on this. That's a pretty big move for a day. Oh, they won't let me save it. Freaking stockcharts.com. I have to clean out my chart list. They tell me I have too many charts. All right, TLT, 20-year bond ETF. We're down on the week, but we reversed off the lows of the week. I know the yields came in today, and I'm literally playing catch up with the markets right now. You know, we're up on the day, but we sold off the highs of the day. Bond yields. Here's the problem, folks, is that we good, I'm glad, Franklin. Thank you. We broke out on the week here. Do we close there? That's the $24,000 question. Let's take a look at the daily chart. We could quite very well close there. That's going to be a problem for the equity markets, at least the small caps. Tips. Continue to weaken up here. The dollar hit the upper band of its rising uptrend channel, is now backed off. It was down on the day today. Let's go daily view. Dollar rolling over. So it's not broken, but I do think that we're going to correct here on the US dollar. So we need to look at emerging markets. We're no longer short of gold. That was a quick 24-hour trade. We booked those profits yesterday. I mean, the euro is looking okay here, bouncing off the 200 period and the 50 period moving average. We have a positive crossover of those moving averages, bullish for euro. Let's go daily view. Bullish key reversal. Closed right at 100. FXY, Japanese yen, bounced off of 61. So a little bit of buying there. Crypto. Bitcoin is a buy. I repeat, Bitcoin is a buy. We broke out last week, did a retest this week. We're well off the lows of the week, and we could quite possibly be going up by tomorrow. Daily chart. Yeah. Looking very bullish on Bitcoin. Volatility. At current, it being only Thursday night, we have a breakout on the week. So one trading day left to go. A lot can happen here. Let's see what it did on the day. No breakout. Closing down. Now, this I'm surprised at. The Dow transports at current are trading down below key support. It's very important. If you're bullish on the Dow transports, and we have two positions now in the transports that are beating up names, we need to see a rally tomorrow, or else this is a breakout point failure. Let's go daily view. They may rally this. Nice bottoming tails yesterday and today. Volume was heavy. Let's go intraday. I don't know if I can get an intraday view here. I doubt it. Oh, it did. Yeah, cool. Good up volume into the close. Good stuff. Dow Jones Industrial Average. This is broken. It's broken trend. Down volume light. We're down over 2% on the week. It's a lot to ask to try to recover these losses in one day. I'm not going to be a bit surprised to see them pare their losses on the week, but the fact of the matter is that the Dow Jones has in fact broken down below this lower band of support. That's a problem. S&P 500 down on the week by nearly a percentage point. Volume light. Let's go daily view. It's broken down on a daily time frame, but I'm not too concerned about that. It looks like we want to correct here as measured by momentum. They're all rolling over, but price trumps all, but there was no volume. So a bit of a warning flag on the track. The equal weighted S&P 500, it is broken down on a weekly time frame. Like volume. Let's go daily view. Very similar to the S&P 500. Trip Qs. It is also broken down on a weekly time frame. So let's pause here. Let's take stock of what's going on, pardon the pun. On a weekly chart, we have breakdowns on the Dow Jones, S&P 500, equal weighted anyway, and the, what did I say? Dow Jones, S&P 500, equal weighted, and the triple Qs. So Houston, we have a bit of a problem here. Volume, light. Let's go daily view. Inside bar today closed up over 0.75% on no volume. Let's go intraday view. See what they have in store first for tomorrow morning. Not a great close at all. Equal weighted. Wow. Second consecutive down week. Let's update the chart. As your breakdown. So, let's think about it. We have the major averages, and I consider Qs being average. They're broken down on a weekly time frame. You have a Schiller PE ratio of 37, very, very expensive. We are at the highest level in terms of valuation since October of 2021. Small caps, I'm surprised not more of a bounce today, given that yields pulled back. Let's go daily view. They only closed up a 0.5 percentage point. Okay. The banks. Holding up. I guess it's the best that could be said right now. That's a weekly chart, daily chart. Let's go weekly. No follow through from last week. The banks are a little bit wonky here. No volume to the downside. Let's go back to that daily view. Technology. Not a bad week. Not a bad week at all. It's down, but it's an inside week. We could be setting up for a continuation breakout here. Thin volume. What did it do on the day? Not much. Consolidated. Semis. All right, so we need to do this. I hate to be the guy, but that is my job. Do we have a double top? These are the support levels to watch if we do begin to roll over here. IGV, software technology ETF. I own it. It's down on the week. Daily view. Not bad. We got to update this chart. I think tomorrow is going to be a very, very critical day. We need a strong finish to this week. It's a bull flag setup. LABU, biotechs, no bueno. Avoid. Staples, weekly chart, inside week, thin volume, daily view. This could break out. Declining down volume. Let's take a look at a 30-minute view to see how they close this out. 15-minute will do. They're going to break this out. Let's update the chart. Let's go to a 30-minute view. It's more of a smoothing mechanism. Yeah. There's your wedge formation. Higher lows, RSI. We've broken out. Stochastics have broken out. Guys, I'm really tired tonight, so I apologize. I got like no sleep last night. I can't save this. Son of a bitch. Thank you, stockcharts.com. Well, let me save it. I got to back out. So they're going to break out the staples tomorrow. I will bet you a nickel the staples are moving up higher tomorrow. I'm not going to let them. No. All right, what else do we have? Discretionaries. Now, I was going to short the discretionaries earlier this week, but two things kept me from shorting the XLY. One, Tesla. Tesla is the second largest component of the XLY basket. That's why it's so important. Before you short an ETF, you need to understand the weighting of that ETF. And if it's a company that has, as in the case of XLY, Amazon makes up 20% of the discretionary ETF, the XLY. Not Netflix. Tesla makes up over 12%. So look what happened so far this week, simply because of Tesla's reported earnings. I would have had my face ripped off going into today if I would have shorted it. Would I short it now? No. Especially with Amazon coming out. Now, if Amazon misses, then we short it. Daily chart. Good volume. Emerging markets. We're threatening to break support, and we are extended here. But if the dollar continues to fall and yields pull back, emerging markets, they may rally. Let's take a look at how we traded today. Not a great day, but typical as this is similar price action to what we saw with the rest of the market today. So I'm not going to look too much into it. Emerging markets. This is with China, very weak. China is a basket case. Energy. We're going to talk more about energy in a moment. We'll talk about this chart in a bit, but then I want to go to TrendSpider. XOY weekly chart. We broke out now a month ago this week. I've been looking for 87.50 to get tested. What was the low of the day? 89.20. So if you're thinking about buying the energy stocks, you need to understand correlations. And let's go back to the weekly chart for a moment. Is that over the course of time, this is why we use a weekly chart to smooth out the noise. By and large, USO, which is the oil ETF, and XLE are highly correlated. So you could make the statement somewhat safely that as goes oil, so goes energy. And that has been the case. Oil has been weak these past few weeks. Energy's been weak. Let's take a look at the daily chart and see if that correlation is improving at all. And it has. Like you go to the weekly chart here, the correlation at last tick was at 55% correlated. Now you drill in further, pardon the pun, we're at 97%, 91% correlated. So the question we need to ask ourselves next, if we're contemplating buying energy, is what did oil do? That's the most logical question to ask. And oil on the week is up over 2%. Horrible price action. I mean, the charts couldn't be more different. I mean, oil's breaking down, energy's breaking out, even though they're highly correlated. So what if? What's our what if here? Let's play a game. What if? We're just developing a hypothesis right now. What if? What if this was the low here, 65.27, and we're putting in a higher low? And what this is here is the pivot point, which not so coincidentally happens to coincide to the T with the apex of the prior wedge formation, of which we broke down a couple of months ago. Are we ready for a massive breakout here on oil? Stick around. We're going to go over seasonality in a moment. Let's see what oil did on the day today. Horrible price action. Gasoline prices, they're up on the week. I did not go over CRB commodity index. That's an inside week so far this week, folks. No new lower low. Let's talk about gold. Actually, no, oil. We bought oil yesterday, and man, we're not up 15%. Well, we captured most of this trade here, but we're not up 15% on the week. What do we do on the day? We're up 5 1/3% on the day, and we're up a few percentage points, maybe 10% we're up on this since yesterday. Great volume, really great volume. Gold, topping action. We shorted gold the day before yesterday. I thought it was overbought, and it turned out it was. We booked profits. It did manage to rally today. I still think we could pull back here. We're at resistance. I just want to check the gold stocks. GDXJ now down on the week. We booked half profits on the gold stocks. I'll let Franklin or Sean correct me. I think it was was it Monday or Tuesday? Right here. That's when we got out. This filled candlestick on the 21st. That's when we got out. So we're still in that neighborhood. TZ Burton. I think about that all the time. My answer to you is, should we be worried? Yes. He's telling you. He's telling you without telling you. He's big in the treasury market right now. So, yes, be very, very worried. Good old Warren is buckling up. Silver, reversal week. Okay. How many people we have? Only 16 tonight? Quiet. It's quiet. Oh, what time we got? 6:40. Let's do some chart requests. I'm going to sign off early tonight. All right. So I need to go to the forum. Let's bring this up over there. That way I can jot down requests. Let's go to the feed. I definitely want to talk about energy and seasonality. Lyondale Basil, I believe that is. Mr. Franklin, LHX. ASM. Polish Taco. GTLB. All right. Let's do it. I got to reclaim this back. Boop. Let's go to single screen. For those of you wondering if I'm still long of Starbucks, no. I sold it today as it began to fade. I think we're going to pull back and do a retest down here. So I may just be buying that back tomorrow. So let's first talk about XLE. I know we just spoke about it, but I want to talk about it in terms of seasonality. Now, this is a monthly chart. Let's bring up the seasonality tool. Folks, we're using TrendSpider. XLE. What time frame did he use? I had to go back to that email because this looks different than what he sent me. This is the owner of TrendSpider that forwarded this out to me. Where is it? I lose my mind or what? Here we go. He's using 26 years like I am. Seasonality change percent to 0. We did that. Oh, excludes non-presidential years. I see what he did. So I'll share the email. So here's the seasonality. And what he did here, this is why it looks different from me. What he did is he excluded all these years where there was a presidential election cycle. And October is generally the worst month out of the year by far. But November and December are very, very strong. Good chart. Thank you, Danny. Big difference. Either way, it's still a grind higher from here. So good stuff. Good stuff. I'm glad I went over that. Everyone is gearing up for New York versus LA. All right. Let's go over UPS. They reported. I just want to see what they did. They were up. They reported this morning. I'm not getting why the transports are so weak. UNP, another transport. Boy, they're down. They're down on the week. How'd they do on the day? Woof. Brutal. Now we know why the CSX was so weak today. Let's talk about CSX for a moment. Let's overlay. Let's get rid of the automated trend lines. Let's bring up the Bollinger Bands. Let's bring up the Keltners. So we had a nice big fat Bollinger Band squeeze that was setting up, and it fired off. However, it reversed. I think that this could hold. Would I buy more here? I was thinking about it today, but I won't buy more until we recapture this support level here. Now resistance at around, let's call it 34 bucks a share to be safe. Here's the weekly view. Very, very tight Bollinger Band squeeze. Very, very tight. But remember, it can fire off in any direction. But I'm going to hold on to it to now. I'm not going to build on the position. I'll wait for it to break out and close above $34 per share. But I'm not going to add more, especially on that UNP report, which Franklin's telling me is pretty bad. And I take Franklin's word for it. So the charts don't lie and Franklin doesn't lie. So his word's good enough for me. Let's take a look at LYB. This is a weekly chart. It's rolling over. You're going to want to avoid this until it recaptures 96. You have a very nice tight Bollinger Band squeeze here. That, however, is momentum is going in the wrong direction. And you've broken down. So while this could rally back to retest, I wouldn't be a buyer until it closes back above 96. Right now, this is setting up as a potential short. I wouldn't short it right now. I would wait for a check back and a failure before I shorted it. Daily view. It's oversold. It may pop, but I think the best you're going to hope here is you get a rally up to 94 bucks a share. At that point, if it doesn't close above 95.35 in a few days, it's probably going to roll over and head south. So I would avoid this to the long side, and in the coming days, be watching for a short on a failed recapture of what was long-term support is now resistance. LHX. Level 3 Harris. Good looking chart. Let's go weekly view here. The weekly view, this is down. This doesn't make sense. We're up 2.83% on the day today. What am I missing? I feel like somebody's playing a joke on me. Did they report after hours? Is somebody goofing on me here? Let's take the data off. Yeah, okay, I'm not losing my mind. They must have reported earnings after hours. Yep, that'll do her. Okay, wow. All right, I thought I was losing it there. Okay, so the weekly chart is not reflecting the daily after hours price action. If this holds, this is a buy. Good looking chart. But it's got to hold. We don't know what's going to do tomorrow morning. I would wait until tomorrow afternoon and see whether or not these gains hold. ASM. Good looking chart. However, it's very extended. And it's leaning into the third standard deviation Bollinger Band. You got to avoid this. I would not initiate a new trade. I'd be booking some profits here. Be careful, folks. Be careful. GTLB. Let's go weekly view. Good looking chart. Momentum rising. Higher lows. Beautiful. This is what you want to see. Breakout the week of October the 7th. Retest 1, retest 2, follow through. Perfect. We're still down on the week, but I'm optimistic because we're off the lows of the week. If they close this green tomorrow, I'm a buyer. Beautiful daily chart, looking very, very good. Buy, buy, buy. Just watch out for earnings. Folks, I'm going to call it a night. Franklin, you are very welcome. Have a great night, folks.